Wall Street just went on a 6-week winning streak, and the AI trade is getting a massive shakeup that could reshape your portfolio. Buckle up, because today's market action is telling a story you need to hear. Let's get into the numbers. The S&P 500 surged nearly 1%, closing at 7,398, a new all-time high. The Nasdaq, even better, it ripped 1.71% higher, landing at 26,247. Also a record, the Dow barely moved, up a microscopic 0.02% at 49,609. And here's something important. The 10-year Treasury Yield dipped to 4.36%, falling over 0.5% on the day. That's a big move for bonds, and it's giving stocks room to breathe. But here's the kicker. This isn't just another green day. This is the 6th consecutive week of gains for the S&P and the Nasdaq. 6 weeks. That kind of momentum doesn't happen quietly. So what's fueling this rocket ship? 2 words: AI infrastructure. But the players are changing. Wall Street is calling it a changing of the guard in AI. Intel, AMD, and Micron all surged double digits this week. Think about that. The old-school chip names are suddenly the hottest tickets in town. Investors are betting that CPUs and memory chips are going to power the next phase of artificial intelligence, not just GPUs. Meanwhile, Nvidia is still in the game, but it's no longer running alone. Its stock was up less than 2% today, while companies like Iron, a renewable-powered data center operator, exploded nearly 8% after announcing a multi-year partnership with NVIDIA for AI cloud expansion. The market is telling you something loud and clear. The AI trade is spreading out. It's no longer a one-stock story. And there's a widening gap between chip stocks and software stocks. Investors are piling into hardware, into the picks and shovels of AI, while software names are getting left behind. That divergence is one of the biggest themes of this earnings season. Now zoom out for a second. Market sentiment sits at about 67 out of 100. That's solidly in greed territory. Not extreme greed, but enough to keep your guard up. The yield curve spread is normal at 0.48%. Unemployment is at 4.3%. Nothing screaming recession, nothing screaming panic, but nothing screaming all clear either. Now here's what you need to watch next week. Monday brings existing home sales data, and Tuesday, that's the big one. Core inflation numbers drop, both month over month and year over year. If inflation comes in hot, that falling Treasury yield we just celebrated could reverse hard. And if it reverses, this 6-week rally gets tested in a real way. Oh, and one more thing. Dunkin's parent company, Inspire Brands, just confidentially filed for an IPO. They own Dunkin', Arby's, Buffalo Wild Wings, Baskin-Robbins, Sonic, and Jimmy John's. When a massive restaurant empire is trying to go public, it tells you the IPO window is wide open. Confidence is high. Money is flowing. So what's the bottom line? The bull market is alive. AI is broadening out beyond NVIDIA. Bonds are cooperating, but greed is building, and inflation data next Tuesday could be the plot twist that changes everything. If this kind of breakdown helps you stay ahead of the market, smash that subscribe button so you never miss a beat.